Welcome everyone to another edition of the Industry and Transition Zoom call. I am very happy to have our friend David Canter from Fidelity with us. Welcome, David.
Tony, thank you. Great to be here with you.
As always. Hey, it's been a while, I think, since we've done a live talk. Of course, we talk every once in a while, but pandemic. It's been a heck of a year. Geez, we came through a tough year, and you don't want to belittle it because so many people suffered and continue to suffer, through it. But it certainly feels like maybe there's a light at the end of the tunnel. So, lessons learned. What are we bringing forward? There's been a lot of tragedy, a lot of change, technology, and you guys are always and you particularly always on top of that. But it's transformed our industry, and in a lot of ways for good. And kind of want to see what you think the challenges might be with that too going forward. So, how'd you all make out last year? I know you had a big year recruiting, and then let's talk about what where the future's going to be.
Yeah, well, thanks, Tony. It's great to be here because I remember the last time we spoke, I always saw a light at the end of this, and I think the light continues to get brighter every day. There'll be bumps along the road, yeah. But as I like to say, the bumps in the road aren't the bumps. Those are the road. That's the road. We did have we were very fortunate. We had a good year in our business, attracted new advisors. Our advisors that we work with attracted new clients. I mean, in many ways, we're just a reflection of the broader economy. There's a lot of liquidity events that have happened and continue to happen. I said this to you, I don't know if you remember, and I wasn't the first, yeah. Although I tend to think that, the pandemic of 1918 led way to the roaring 20s, and well, we may be off to the races. So I think we've learned a lot, but at the same time, humans have short memories. So we're certainly going to take some lessons away about how we can, work dynamically. So when we need to be in person versus, we can be in person. And I think, but there is going to be a period of exuberance where we're just going to be happy to see one another in three-dimensional form.
No question about that. Yeah, no question about that. But some of this technology, in some ways, and I hate to just put it in general terms, but the independent movement was a little further ahead here because you didn't have centralized office spaces, you don't have centralized this, it was sort of decentralized already. And what you had to get into was Zoom calls. And look, there was a level of acceptance with our clients that this is the way it has to be. If I want to, we've talked about it, if I want to see my grandkids, I got to do Zoom. So if I see my doctor, I got to do Zoom. So it's okay to see my financial advisor. And they accepted it, right? And that made it easier to do. But the decentralization is the thing that Fidelity had, versus, a wirehouse where, everyone's supposed to come into the office every day and you got to see them and talk to them and, tell them what to sell.
Well, in many ways, it's like, and we're going to talk about crypto, I know, in a moment, but, crypto is the advent, the continuation of decentralized finance, DeFi. And in many ways, the independent space has been, DeFi in its own right. So, folks don't have to be in a big sort of, wirehouse environment. They can have their own offices, their own space, and they can draft off of the scale of firms like Fidelity. So I think that, we do have our clients that sort of cling to their offices and the in-person meetings, and all of our clients, virtually all of our clients, have physical presences. But during this pandemic, it's been fascinating to learn about some firms that were sort of born remote. A great example is a firm that I spoke to early in the pandemic called Facet Wealth. They built their firm to be, in a remote work environment. And so they purposefully find ways to have associates connect. They do something, Tony, called the random lunch generator, which, I can tell you about. I love that name, but they sort of make, they're purposeful about employees getting together and spending time, and they have random lunches that you have to attend with other associates.
Well, I see, that's terrific. I mean, I think I mentioned this last time I was talking about this. I have two daughters that are in their mid-20s. It's very hard to bring young people to business without having a physical presence. I mean, we can have random lunches, we can do all these different things, but at some point you got to get together, because just when you're young, you just don't get the lay of the land. And especially also in learning our business, you know what you know what a 401k is, but you don't sell them every day. But the guy down the hall does, or this woman's been doing 401ks for a whole. So you go down the hall and you ask questions. Maybe you split the business. There's something great about being together that I hope we don't completely lose. But at the same time, your business doesn't have the same. I talked to just the other day a CEO who was looking at 80,000 square feet on Park Avenue and is now looking at about 35, 40,000 because you can change it. That's a real shift in economics of the wirehouse business, versus the independent or whatever business you want to call the BD business versus independence, where it's much more spread out. That your guys can make their decisions a lot faster and adapt quicker. Those random lunches aren't happening at the wires.
Yeah, I think that this past year has taught us and will make us think more carefully about how we use space. But I'm probably among those who don't count out commercial office space.
Yeah.
There always is going to be a place for that. And just as you said, you need to be in person for three main reasons. You can't forget these three main reasons: to collaborate, to innovate, and what's the competition doing?
Yeah.
So, if the competition is meeting with people in person, the competition is collaborating in person, the competition is innovating, that's where you really lose out. And your point about younger associates is a very good one. I know at our firm, we've hired over 10,000 associates in the past year who have never set foot in a Fidelity site. So I know they're anxious and hungry to get into the office and get the chance to interact with other colleagues.
And culture. I mean, culturally, it's hard to do culture, via Zoom. If you've got a mature group that's been around together for a long time, they get the culture, and that's why it sounds to me like this company facet thing. Hey guys, we know what we're doing, and that sort of fits in well with their culture, and they're keeping everybody together and jazzed up. Hard to do when you're just a brand new person and you don't get it. Your last culture was a sorority party. It's hard to figure out where to go next for them.
Exactly right. You need other associates to collaborate with, but also as mentors. Yep. You're looking to grow your career. So, I know that I was really fortunate along the way to have some great mentors, and I'm always grateful for that.
Yeah, me too. And you need to be in person to do that. So, so we'll never lose that especially in our business, which is full of persons, right? So that's the way it goes. You did say we were going to talk about Bitcoin, which I want to do. So it does fit into this decentralized, sort of discussion. And we're all trying to figure out how we're going to work in this new environment. AdvisorHub too. When are we going to be up in-person events, which we love, but the virtual events have had a lot of value. And now we look at a situation where I hope it's not one of those deals where you'll kind of learn this lesson early in Wall Street. When the firm gives you, a bond deal, or they give you something that, hey, it's so great, by the time it gets to advisors, all the money's been made. And you feel like your clients are going to get screwed here because, we're like the last people to know. Bitcoin, this has happened, and we just talked about a cultural kind of vacuum. We're not together. It's happening virtually, which maybe is, apropos for Bitcoin. But here we are, sort of not in an environment. Are we the last guys to know about this? Are we still at the beginning of this? Is this a Ponzi scheme? These are things you worry about when you're trying to be a cynical Wall Street person, which is, what is this? And by the time they tell me, maybe all the money's been made.
Well, I personally have been, studying Bitcoin very closely since December of 2015, when I opened my first Coinbase account. Yeah. And what I would say is this: we have a business within Fidelity called Fidelity Digital Asset Services, which is a broker and a custodian of digital assets, focusing currently on Bitcoin today. And Christine Sandler, one of my colleagues who works in that business, says she's often asked to compare where we are in crypto, like the baseball game innings analogy. And she's always, up until recently, she said, well, if it's a 9-inning game, we're still in the parking lot. We haven't even gotten to the stadium yet. So to answer your question, we're still early. But But now she's saying, well, maybe we've actually gotten to the ticket counter to enter the arena or enter the baseball field. Look, it's a very volatile and new and emerging asset class, but this is the time for advisors to get educated.
Yes.
We are strong proponents and advocates of getting educated. My good friend, our good friend and colleague, Rick Edelman, has done some great work around this with the RIA Digital Assets Council. Yeah. But beyond Bitcoin, which is just one type of cryptocurrency, they're believe it or not, they're up to 5,000 different types of cryptocurrencies, coins, if you will. Bitcoin just happens to be the largest by quite a wide margin. Get educated not just about Bitcoin and other crypto, but the whole ecosystem. I mean, there's the origin story and an
I love the buying a pizza, right? Some guy goes in, that's the first transaction of Bitcoin, right?
Or you take it all the way back to, the figure Satoshi Nakamoto, who either he or, a group of folks, created this blockchain technology to express Bitcoin. So there's the origin story, there are the miners, there are the exchanges and custodians, there are the types of investment vehicles. Who are these investment sponsors? What are the exemplar currencies? Who are the regulators in this space? Who are the venture capital funds that are, active here, backing firms like Coinbase?
But see, that brings up in my mind the central question, because you and I are in total agreement on education. We absolutely need to get advisors educated. And the reason is, this is turning into an investment. It's a viable investment. Companies like Fidelity are backing it, then it's a real thing. But they have to understand what they're doing. So I hopefully will be able to partner together to sort of bring this messaging and education to everybody, right? Because it's super important to do. But that's part one.
And Tony, to that point, because if an investor asks their advisor about cryptocurrency, the answer just can't be, I don't know, or I don't believe in it. You have to be able to give a very cogent and thoughtful response.
No, right. Even in the negative, you have to explain to your clients why, and it has to be, you're right, not just because I don't understand it. I'm not gonna talk about it. Right? It's there. So that brings up, the responsibilities. So unlike a speculator or, somebody who just, has enough money and they want to burn a little bit and see what happens, we have a responsibility. Advisors are responsible to their clients. So the education is one part, but the regulation seems to be another. And the association, especially in times like these, there's, people's eyes are trying to be open with ESG and things like that. And look, the first guy to use Bitcoin is a drug dealer in Ecuador because I can, and no one's going to know where the money's coming from, and I could put it in there and I can be quiet. It's just those are the worrisome things for people who have responsibility. And then the flip side of that is, how fair is it that we have to be responsible and other people don't? We have to, but that's just the nature, I guess, of our business. We have to look out for our clients. So we need to find out just morally and ethically the whys and wheres of this thing.
Exactly. And that's why, studying it and getting educated and efforts like this RIA Digital Assets Council, I think are, going to be very helpful. I think a great book to read, and I've said it before, is a book by Nathaniel Popper called Digital Gold.
Very readable book. Fantastic. Yeah. I checked it out since you recommended it. It's a great book for people. It's a story.
It's a story. It's approachable, but it talks about, a lot of these issues that you've raised, the pros and cons, and Bitcoin does have, let's just say a very varied history as to its origin, how it started to be used, and now how it's expressed today. So it's all part of the educational process.
Well, even look, gold, any currency has a negative history where you look at it, because it was used to buy and sell everything from people to drugs to whatever. So it could all be viewed negatively. But I do think the responsibility is for the larger players now that they're in the space, to make sure that there is some sort of, and when the government doesn't regulate it, we have to self-regulate. I don't know that we have the best history in this industry of doing that, but certainly if the big companies are putting their names towards this thing, there has to be a certain degree of comfort on their part that they can house this stuff. They could, that you can have an account that actually manifests this currency right in it. I mean,
yeah, and putting aside the cryptocurrencies themselves, the other big promise of Bitcoin and Ethereum and some of these other assets is really blockchain technology. It offers a way to engage in smart contracting, and it has uses beyond the cryptocurrencies themselves. So it's an exciting ecosystem. It's one that, if you look at its history, it's certainly been volatile. So back to your original premise, is it too late? Certainly, I, on a personal level, don't think so at all. But there's never been a better time to get educated. I'll say it again. I know I'm a broken record, but the education is just so worthwhile, and it's just very interesting too.
So in terms of the folks that work at Fidelity, the RIAs that are there, what are you doing to help educate them? What are you offering them? How are you trying to get the word out? Because what you say is true. Right now, in my mind, robos are a threat to our business. I know people don't think so, but they are. 24/7, they're available. For most people, some people like going online and getting information. We have to make sure our advice is that's the only thing we're going to get paid for going forward, right? So commissions will die off and it's just our advice. So we have to be knowledgeable about Bitcoin enough to have this, as we just said. Taxes are another thing, that's going on now. How are firms sort of getting these messages out there to give the one thing that a robot can't give right now, which is advice? How are you sort of educating your folks to give them a competitive edge?
Yeah, well, I mean, as you'd expect, as a firm that has a digital assets division within the broader Fidelity enterprise, we offer a steady diet and a robust menu of education, whether it's webinars, whether it's white papers, whether it's other meetings for our advisors, for our other institutional clients, such as family offices, that provide what we think is very approachable and accessible educational resources. But we also have a way to activate investments. So we think that this is a way that can make it approachable for these institutional investors that have an interest in this asset class.
Well, and then also in terms of how to invest. So as advice, two things. One, it's always struck me, I think when advisors think about going independent, and I started a couple of these firms, right? The worry is I'm going to have less sophisticated products. I'm going to have this, I'm going to have that. I feel like, and it seems like the independent folks are sort of leading the way. Certainly you guys are cutting edge with a lot of this stuff. And when people go independent, they don't realize the level of sophistication that they can, that they and their clients will have access to. Even family office stuff, like from Johnson Family Office, I know you can use over there at Fidelity, as to now the DeFi stuff. I mean, it's pretty exciting.
Well, and you and I have talked about this. One of the great awakenings, if you will, becoming an independent advisory firm is you actually have access to so much more, not so much less, in terms of resources, products, services, investments, investment archetypes that you can access. The trick is, how do you curate it? In a wirehouse environment, you had a much more limited menu in some cases, or in many cases. But
it feels like the lowest common denominator over there. Like they manage to the lowest common denominator, whereas you guys are sort of giving access to everything and saying you guys have to, is it self-curate, or you guys got to pick? It's a huge menu.
Yeah, well, the menu is as broad as you want it to be, because it could be products and services that are offered through Fidelity, or products and services that are offered through other investment sponsors, other investment firms, because we are open architecture. But we do have resources to help firms with their investment curation. We have a whole variety of resources, whether it's the Fidelity advisory resources, or preferred arrangements with other third-party partners.
It just seems to me like this just DeFi, we should call it, stuff, it could be the real, point of a spear for independent firms, because this could be a real differentiator because of the challenges that you may have in a more restrictive system. It's almost like we're going to have two systems. All this sort of relates to the ethos of Bitcoin, right? Because it's supposed to be free and open and unfettered. And clearly it's not that way at a large BD or a wire. They're not getting free and unfettered access to stuff. You know what I mean? And on the independent side, you can.
Yep, that's absolutely true. And, that's something that we certainly see. And that's why we're responding. One of the things that, we're working on, and maybe we'll have a chance to talk about it together, is trying to demystify this ecosystem, because there are a lot of elements to this ecosystem that, for those that are interested, that they're going to want to dive deeper into it.
Well, that's a trick. You said it at the beginning. Education is going to be the key, and in my mind, that's the cornerstone. For what we need to do as an industry, going forward. So I take our responsibility to do that at AdvisorHub pretty seriously too. I mean, there's the reason we do the news to keep people, informed. So I think that the more people can learn about this, and the more you all, should share those resources or let people know where they can get them, that would be, great too. Because, look, we're in this thing, together for better or worse, and collectively we can maybe make this whole the pieces about Bitcoin that are, uncomfortable. We can maybe soften those edges a little bit if we work together.
Absolutely. I that's very cohesive to my viewpoint.
Good. Well, look, we've had, I know it doesn't seem like that, but I think we've had everybody, going here for the last 20 or so minutes. Is there anything that I haven't brought up that you want to talk about that's going on today?
There's always things, Tony. It's always a pleasure to be on the show. The only other thing I'd share, and you and I have talked about this too, but back to open sourcing and educating the profession, the industry. One thing I'm really proud of is we assembled at Fidelity as a team the list of RIA firms that have $1 billion or more in assets, that are in really the wealth management space. So with the help of my friend Megan Griffin, who you've met, with Scott Gorham, Kevin McGrath on the team, we list in ordinal fashion the 749 firms with $1 billion or more in assets. And why? Because, people want to know who they are. Yeah. These tend to be the faster growing firms. So, perhaps we can talk about that, the next time we're on the show. And guess what? Coming soon, a list of all firms in the RIA space that have 500 million or more in assets. And that list is shaping up to be about 1,400 firms. So fascinating.
Wow. Well, the thing is, like financial advisors, it's a tough business. It's tough to get ahead. So my experience with advisors is they want to hear from other advisors. They want to hear from successful advisors, how you did it, because everyone has, wakes up sweating every once in a while because they got hung up on so many times on the phone at some point in their career, but here are some people who have figured it out. And in this new digital world, I know it sounds simple that you can't use if you're using your phone, it's analog, right? You got to be somehow new. So people are very interested. How are these successful firms doing it? What are they doing? What are they saying to their clients? It's different than what I'm saying. How can I grow my business and succeed and help more people? They're fascinated by successful advisors.
Yep. And since you asked, and then I know we're running over on time, the last thing is a challenge to you. Maybe we should collaborate on making the very first, to my knowledge, non-fungible token for the RIA space.
Done. Say no more. But we have to call it the Tony. Or else I'm not doing it.
All right, we'll talk about that offline and in post-production.
All right, good. All right, thanks for being here, David. Always a pleasure to see you.
Thank you for having me. It's my pleasure as well. Cheers.
Cheers.